It is sweltering outside. I feel like I am literally melting. I mean, we talked in the last few weeks about how incredible an environment that Newlab has created, but today I am especially appreciative of just the fact that it is comfortable in here, and it is nothing like it is outside, because if it were, I do not think that I would survive.
Man, you are so right. It is crazy hot outside. But then again, I can just keep on thinking back, saying, you know what? This is New York. It could be Arizona. We could be in like Southern California. Those people are really hitting like records every single day above 100. So you know what? It's all in perspective, right?
I don't know who you're kidding. You love the heat.
This is also true. Heat is good for me.
It's me. I'm the one that's not built for this. But enough about the heat. Thank you all so much for joining us for this episode of Planet First Action. We hope all of you who are listening in from the U.S. have had a wonderful July 4th holiday. My name is Jacob Frost.
And I'm Ryan Gordon.
And we are your hosts. And I got to say, maybe it's because of the heat. I don't know if it's that or something else, but at the very forefront of my mind is that $27 billion from the Greenhouse Gas Reduction Fund and what it is going to do to this economy, to our communities, to the world, really.
Absolutely. No, I mean, we're just so excited that this is truly a once-in-a-lifetime thing. It is actually the largest single non-tax-based grant in history, and all dedicated to how we can actually help solve the climate crisis we're in right now.
And that's exactly right. It is honestly, it is so consequential. We know it is on the minds of so many who are in this space and working to build new technologies and sort of at the forefront of policy, but we also know that so many more people need to know about it and need to understand what it really means. This investment, part of the largest climate investment in U.S. history, this $27 billion is going to affect every single person and every single family. If you are thinking to yourself, well, I don't work in climate, or this isn't my priority, why should I care about this? I should just turn this off. Let us tell you now, as clearly as we can, that everyone, not just investors or innovators or policymakers, everyone needs to understand what the Greenhouse Gas Reduction Fund is. $27 billion is an enormous amount of money. Is it enough to fully combat the effects of climate change and achieve our goals by itself? Probably not. But its deployment into communities is going to fundamentally reshape the way we live. It's going to change the homes that we live in, the way that we commute, and the way that we power our daily lives. And that is why we are so excited to be diving into this subject with our special guest today, and really throughout the rest of this series.
That's right. For those who are just joining us for the first time today, this is a show about what's happening on the front lines of sustainability and climate action, and learning from the leaders who are in the trenches and making it happen. It's about breaking down silos between communities, businesses, investors, policymakers, across stakeholder groups. It's to enable shared understanding and to facilitate action so that we can actually achieve a just and equitable energy transition. And regardless of who you are or what field you want to work in, or where you happen to be in your sustainability journey, there's going to be something valuable that you can learn.
Speaking of something valuable to learn, don't you think, Ryan, that we should tell everyone about the first two episodes? I mean, if you guys didn't get a chance to yet, definitely go back, check them out. They're parts 1 and part 2 of our sit-down interview with Newlab CEO Cam Lawrence. We covered the amazing work that Newlab is advancing under Cam's leadership here in the Brooklyn Navy Yard and in Detroit, and what that work means for the revitalization and development of those communities, and how Cam and the team at Newlab are raising the standard on what effective convening looks like as they support those organizations who are quite literally building the future today. And I mean, that's the idea, right? That recognition that the future is here. And so what do we do about it? I mean, that is what this podcast series is all about. It's not about debating the science of climate change or the degree of precision and certainty that are afforded by climate models and forecasted trajectories. And while we know that public policy and the role of government is an essential component that we're actually going to spend a lot of time discussing, it's also not about wading into the political thicket. Because we know people come from different walks of life.
More than anything, it is that we recognize, whether we like it or not, the future is here. And the technology, the systems, the policies, the social contracts that really determine our collective future are being built, created, and decided right now. These new technologies and businesses come across our desks at Gordon Frost every single day.
And you look at the impact these changes are going to have, not just on the jobs of the future, but the jobs of today. The transformative impact is going to have across local communities as well as individual families. Fundamental changes in the way we do business, our very way of living. Again, for Ryan and I, it's something we talk about with our team all the time. It is so important for everyone to understand that these aren't technologies and businesses of some distant future. They are here today. Technologies like solar, wind, electric vehicles, heat pumps. Heat pumps. I mean, for those of you who do not know, heat pumps are this incredible technology that are a complete paradox when it comes to how impactful they are going to be and how relatively unknown they are in many parts of the country and the world.
I know, it's crazy. I mean, when you really think about it, heat pumps were actually developed more than 100 years ago.
Exactly.
People have no idea this is actually a really old and standard technology that's really being kind of revitalized for today. And the decisions made today have massive implications for every single country, community, and family.
And that means that we need to engage. We need to facilitate dialogue and conversation and ensure an active role from and for all communities for a more just, equitable, and inclusive future. I mean, you take the incredible work that are being done in places like Detroit, in New York, in Chattanooga, in Denver, and to amplify and support that which is driving forward progress while spreading those learnings and insights for greater impact.
That's absolutely right. So from across the country to here at Newlab in Brooklyn Navy Yard, over the course of this podcast series, to bring on this stage the leaders who are on the front lines of action in communities, in policy, in technology, business, finance, to ask the real questions, to see what's really going on, to learn from, to educate ourselves and our broader collective community.
Exactly, because as Kofi Annan, the 7th Secretary General of the United Nations and co-recipient of the Nobel Peace Prize, stated that knowledge is power, information is liberating, and education is the premise of progress in every society and in every family.
And with all that said, we are very excited to be continuing this conversation today, building from the conversation with Cam Lawrence over the last 2 weeks and with today's special guest.
Because one of those areas where knowledge, information, and education are especially crucial to focus on is an area where we know that nearly every single business, technology, community initiative at one time or another is either frustrated or blocked. And that is when it comes to raising capital, to financing a project.
In fact, this very initiative, Planet First Action, was in part born out of our work at Gordon Frost, where for nearly every organization we supported, we saw that gap between the innovators and the organizations in need of capital and the investment community, and in particular in this climate and sustainability space.
That's right. And that's why we kicked off the Planet First Action Community Initiative in partnership with Bernstein Private Wealth Management earlier this year to highlight leaders who could help uncover for each kind of stakeholder, the businesses, the community organizations, the investors, the policymakers, what really is the financial materiality of sustainability.
Exactly. What's going to make all this tick? And joining us on stage momentarily, who shared such rich insights at our event kickoff to continue and build that conversation, is Tony Curnes, founding partner of Purpose Venture Group.
That's right. We are so excited because Tony is the founding partner of Purpose Venture Group, which is a strategy consulting firm working at the intersection of climate, finance, and policy, with a focus on growth and go-to-market strategy, strategic finance, and organizational transformation. In other words, they are some of the best in the business when it comes to taking some of those most challenging macroeconomic factors and helping companies figure them out for themselves individually so that they can get the capital they need and actually grow.
Yeah, and they have been so successful. And we'll put all of these in the show notes for those who actually want to look into these companies more. But just for some of PVG's past and current clients, include high-growth startups such as Mill, Rondo Energy, and Posigen, and not to mention incumbents such as Airbnb, Arcadia, and Mosaic.
That's right, Ryan. And for all of you who are listening in, as impressive as that is, it doesn't even stop there. It goes further because Tony and the team at Purpose Venture Group have also incubated and launched 2 national nonprofits, Rewiring America and the Power Forward Communities Coalition, then really are just leaders at the forefront of the industry and know what it takes to make impact investable. I mean, Tony himself is just incredible to be working in this space, to have his experience, because he has over a decade working in the private markets, working in investing and finance-oriented advisory roles. Prior to Purpose Venture Group, he was the principal at Centerbridge Partners, where he made those investments himself in private equity, in distressed credit, and primarily in the technology sector. And he's been the one who's served on the boards of these companies, both in technology and the circular economy. So he just has that robust insight himself.
Tony, like so many of the leaders that we depend on, who are bringing their expertise from different parts of the economy, from different career paths, to bear in their support of climate action. The same was true of Newlab CEO Cam Lawrence, and the same is true for, frankly, Jacob and myself, and will be for every leader we bring on this stage.
That's right. And for everyone listening in, that's really how we see it here at Planet First Action, because the truth of what this generational moment calls for is actually reflected very well in the words from over 100 years ago of the American author and poet Edward Everett Hale, who wrote, "I am only one, but I am one. I cannot do everything, but I can do something. And I will not let what I cannot do interfere with what I can do."
That's right. And that's what we do here over at Planet First Action. It's about what we can do. It's about that something. And we know that everyone has a role to play in building our sustainable future.
Exactly. And when it comes to that challenge of getting these new sustainability and climate companies financed and capitalized, we are so glad that Tony, like so many who have excelled in their careers across industries, answered the call to bring his insights and talent to bear to confront this challenge. Because he not only understands the full spectrum of capital that is available to these companies, but in fact was instrumental in the development of the new coalition that was recently awarded a portion of that $27 billion that is currently being deployed to help decarbonize buildings, decarbonize transportation, and just bring on new clean energy onto the grid. Tony was instrumental not in just the winning of that, but now also continues to work to ensure it is deployed in a way that maximizes its impact.
And we are especially glad that a part of that $27 billion, as we're sure we'll discuss further with Tony, is specifically dedicated to uplift disadvantaged communities. So to have Tony here to provide that insight for founders, the investors, and the community leaders who want to understand what that $27 billion means for them is invaluable.
That's exactly right. And that's the thing, too, is that as important as it is for each of those types of audiences and stakeholders that you just mentioned, the founders, the investors, the community leaders, it is also, as we said at the very top, so important for even just the everyday person to understand what this greenhouse gas reduction fund, what that $27 billion is, and how it is going to affect your life. Because the truth is, it is going to affect your life. It is going to fundamentally change this economy and the way we live.
Ladies and gentlemen, it is our honor and pleasure to have on stage with us Tony Curnes of Purpose Venture.
Thanks so much for joining us, Tony.
Yeah, absolutely. Thank you so much.
Thank you for having me.
Thanks for taking the time. I know you just got back from some travel.
Yes, London.
How was that? How was everything over in London?
It's excellent. We were visiting one of our partners, a venture firm, Systemic Capital, and they were having their annual general meeting. So I got to meet with a lot of exciting portfolio companies, and I hear a bunch of great updates on the progress they're making. So
Nice.
It was great.
No, fantastic.
Good to be back.
Fantastic. No, absolutely. So before we jump into any kind of real specific questions, really wanted to just talk to you a little bit about, one, yourself personally, what you're really about in Purpose Venture Group, and really what you guys are doing, and how do you actually really scale business effectively, and then also help them raise capital. And then also tell us a little bit about some of your clients.
Definitely. So we are a strategy consulting firm. I co-founded the firm back in 2020. And we've grown now to a team of 11, and we're fully remote, but we have a good presence here in New York. Four of my colleagues are in the New York City area. And so the work that we do is really concentrated in three areas. One is helping clients incubate new products and services. The second is around go-to-market strategy, usually around developing partnerships that can drive scale. And then the third is around strategic finance, which is really where my background is. I was formerly an investor at Centerbridge Partners before starting Purpose Venture Group.
Nice. And we were just mentioning for the audience that it's a good time to be having this conversation, especially with Greenfin happening not too far away, and with your work. I mean, the tagline of making impact investable is more than just a tagline. It is something that is really important, and it's great work. So we're happy that you do it. And I think we mentioned for the audience the March event and that sort of conversation around how do you translate an orientation towards sustainability in terms of the financial materiality of it. You shared some advice that we know resonated with a lot of the audience, especially the founders and entrepreneurs, which is that as fantastic as your mission may be, as incredible as your impact may be, you can't ignore the Finance 101 fundamentals. They still apply. So I'd just love to, especially now for this broader audience that's tuning in, just dive a little bit more into that idea of how do you kind of balance the two of having an impact orientation in terms of your mission, but not being able to ignore those fundamentals.
Absolutely. Appreciate your circling back to that. It's a question that I've thought a lot more about since that event as well. And I think the way that the analogy that I would draw there, and just to give a little bit of background for folks that weren't at the initial event, the piece of advice I shared there is that companies with a mission oriented around sustainability are still companies, and so therefore they need to be able to operate as a sustainable business in its own right, and that means orienting around all of the business activities that a business would need to orient around. One of those being finance, but also, of course, sales, marketing, operations, product, everything that goes into building a business. And so I think that is, I can speak a lot to the finance side of that question, but we could really dive into any particular area of business and talk about what it means to be successful in that area for a sustainability-oriented business.
No, fantastic. And just thinking about it, because obviously at the end of the day, if you aren't able to raise capital, you really don't have much of a business. So do you think specifically for those who actually focus on sustainability that it's actually been easier for them to raise capital in recent years, or no?
I think it has been on the margin, and we talked a little bit at the event about companies that are early stage, really, I think, being able to attract a lot of capital based on the vision. And so a vision that's oriented around sustainability has been very attractive, not just because of the impact angle, but because we know there are a lot of tailwinds in the market and in policy circles around supporting these types of businesses and helping them grow. And so that's not just an impact bet, it's also a financial bet. But what we're seeing is that as those companies grow, they need to prove out that it is financially sustainable to operate in the way that they've envisioned. And so really, as we get into the later stages, in the venture-backed world, call it Series B, C, that's where we're starting to see investors pay a lot more attention to the underlying fundamentals of the business.
That's a great point. It's actually one of the things that we really wanted to dive in, is because it's sort of this term that gets thrown around a lot, and there's some confusion around what it actually means, and it changes depending if you're talking about the public markets or private markets, but that's the green premium. And so one of the insights you shared at that event is that yes, there is a green premium, frequently, especially when you're talking about building these new industries, and it is typically at a higher rate observed in early stage companies. When it's pre-seed, seed, those investors who are investing at that stage are taking on more risk because it's more thesis driven as opposed to just based on the fundamentals. So I guess maybe an interesting way to reframe that question in that conversation is as what you're just saying about the later stages being more focused on fundamentals. Do you think that investors are pricing effectively in the impact and the sustainability side of the business when it comes to those later stages, and that's part of the fundamentals, or is it just kind of being set aside and sort of traditional fundamentals prior to this more focus on sustainability from the business world?
I think that as we get into the later stages, what I've seen certainly is that it's not so much the upside of of sustainability that gets priced in, but the risk potentially being a downside driver on valuation. And I'm pulling in something from a topic we might get into more later on, but just to talk about the world of commercial real estate for a second. Where there are embedded liabilities really in many commercial buildings, particularly in New York City, given local law 97, but really across the world, where building owners are going to need to make significant capital investments in order to make the buildings compliant with local regulation and to decarbonize them ultimately. And what we're seeing is that this is starting to be slowly priced into valuation of these assets. It's often not priced into the official valuations that are driving and underpinning the financing for these transactions, but that's starting to change. And so I think for organizations that are scaled or for assets that already exist, it's really a question of how are you protecting against liabilities relating to this theme.
Yeah, it's actually really interesting because actually it leads into my next point, which is really the kind of almost the counterintuitive nature behind what you actually see from depending on what the stage a company happens to be versus really the size of the actual company they are. Because when you start thinking about it, like the earlier stage companies can be more agile, but at the end of the day, the older stage companies basically have more fixed assets. So, and then the amount of climate risk that's actually being able to actually be more agile and being able to actually move away from that is just really interesting. So how do you actually think about that in terms of how people should really kind of price that in?
I think it goes back to something in my mind that we spend a lot of time thinking about in the private equity world, which is capital structure. And so I think large corporates and organizations have, they may have a lot of fixed assets, but as big of a question is how are those financed? And so if they're financed with a lot of long-term debt or other liabilities, there may be a lot less flexibility to make the type of long-term investment in reorienting the asset base to a sustainable future. Alternatively, if it's a business, for instance, one organization that I was meeting with over in London, they are a dry bulk shipping organization owned by a family, and so because they're not highly leveraged, they have a lot of latitude to experiment with decarbonization of their ships, doing some really interesting things in installing fixed sails, for instance, on these ships, which are pretty amazing, very expensive. But these are the sorts of things that if you are a highly leveraged organization, you're not going to have really the financial flexibility to be able to invest in.
It's so interesting, and it's kind of, I mean, this is not even something we had been initially thinking about, but for that idea of when it comes to what you all focus on, making impact investable. Obviously, there's a very different approach when it comes to early stage companies versus helping large organizations that can sort of pivot their operations. But what you've just mentioned about the importance of even just the underlying financials behind an organization that enables it to make decisions one way or another, it seems like that's not something that a lot of the early stage founders that we know that we work with that are coming from a science background or an engineering background that don't have the financial background may not be thinking about. And so is that something that you think it just needs more general awareness, or is that that seems like maybe that's part of the reason for Purpose Venture Group, but what would you add from sort of that side of things?
It definitely is, and I think the founders that we work with, they're all amazingly talented and smart, and so they pick it up very quickly, but it's really in some sense, it's just a language to learn about finance, and folks pick it up quickly, but I think where we can be helpful is really orienting them to the way that investors think about evaluating their business via a finance lens, and then really learning from them what are that's really the first task, but it's perhaps not the most important task, which is creating the pathway to the company having the impact along the financial dimension that they and their investors want to see. And so that is really a lot of us listening to the founder and understanding what technically is possible. Is it possible to develop a lower cost solution to fulfill the same function that their prototype is fulfilling in a certain vein? And so that is there's some teaching and a lot of listening.
Yeah, sure. That makes sense, and I think I really appreciate the comment, the sort of the analogy of translating it for another language, because it really is a different language entirely, and it is actually one of the things that we wanted to ask you about is when you're helping founders or organizations understand the way investors think. One of the insights you shared at the event in March, where we really were talking about what does it take to make these things financially material, is the types of risk that investors are focused on. So you shared that there's this breakdown, generally speaking, and obviously there's probably more dimensions to this that you could add, but breaks down between technology, policy, and market. When it comes to climate, there's obviously a lot of focus right now on what's going on from a policy side of things. You have the Green Economy Action Plan here in New York City. You have these massive legislation at the federal level between the IRA, the CHIPS, and the bipartisan infrastructure law. A lot of it can be fair to say that that legislation is designed to actually create entirely new markets through the way those incentives are set up. So it sort of intertwines the policy risk and the market risk. So when you're thinking about, again, helping translate for founders and organizations what investors are thinking about, the risks that they care about, how do you think about those two things, those two types of risk, and some of them, for some of these companies, not really being separate but being the same?
Definitely, and I think we've seen that play out in the solar market with how the investment tax credit really alongside two other long-term dynamics, one low interest rates and the third being falling prices for solar PV, really created the rooftop solar market in the U.S. And now we're seeing the scaled companies in that space really having to grapple with a couple of those trends reversing in their dynamics. And so to me, this is an inflection point of where policy has been very supportive of an industry. It's helped it to get to the place where it is today, but now companies are having to look forward and say, are we able to sustain ourselves in a market where interest rates are not as favorable, and this sort of support, government support for our product is changing in nature.
Right.
Yeah. No, I mean, it's really interesting because when you start thinking about just generally overall, you have the policy side, you obviously have the market side, but because these industries are basically so nascent, you start wondering, okay, well, actually, do you have the information you need in order to actually start thinking about, okay, well, how do I actually need to structure this business effectively? So over at Purchase Venture Group, I mean, obviously you work with your clients all the time trying to answer some of these questions. So what do you actually do in lieu of actually having historical background on a lot of these different industries, knowing that basically sometimes it's literally just creating as the business is starting to being built? How do you actually go and find this new data, and how do you actually help those particular clients make their investors comfortable?
It is. It's not an easy challenge, but it's one that we're happy to be tackling every day. I think it's a conversation with our clients about what are the opportunities that are worth going after, and what's the risk associated with them. So we spoke a little bit about the Greenhouse Gas Reduction Fund at the March event, and this is an opportunity where there are some risks around it in terms of being able to deploy the capital effectively, but it's a massive pool of capital, $27 billion in total, and so the opportunity is, we think the risk reward is there for companies to go out and design a strategy to try to help deploy this capital, even though it is certainly it's a limited pool of capital, so it'll be used up at some point and it needs to be deployed in certain ways, but still, it's a big enough opportunity that it feels for a lot of companies worth taking that risk to engage with it and develop a strategy around it.
Mm-hmm. Yeah, it's so funny because as you know, and as many in the audience will come to know, if they don't know already, Ryan and I are huge data nerds, and so we could literally spend the rest of this conversation talking about just data. And it's interesting because the data comes in two parts, right? There's the data that's important for the founders in these new ventures in terms of being able to make the case to investors and make them comfortable so that they can actually get the financing they need. The other sort of part along that continuum is the data that they themselves are creating and how that data is then reflected across the broader ecosystem. We had a great follow-up question from actually one of the March attendees that we didn't have time to ask at the time, from Doug Miller of Energy Peace Partners, who asked about these larger organizations or companies that are trying to transition. But right now, the age-old business mantra of you can't manage what you can't measure may be failing us because climate action is not happening fast enough for some of those organizations. Now, kind of tying those two ideas together, those organizations are relying on the data that these new ventures and these new innovations are actually creating in terms of their efficacy, their impact, their actual potential to decarbonize. So that being the case, this being the sort of data gap that is holding back climate action maybe in some ways, do you think when you're thinking about these larger organizations that are trying to become more sustainable, do you think that there are tools or resources out there that are maybe impactful but underappreciated or underutilized that are available today?
Absolutely. I think certainly we have to go further than just data. And I think one trend, just picking up on something that we were discussing over in London this week, was getting sectors together to a round table to discuss as a group what needs to be done, because I think there is often a dynamic where the solution might be understood by a particular organization, but there is a risk that if they lead in that area and no one else follows, it's not going to have any type of impact. And so, in this particular instance, there was great work that Systemic, the advisory firm, has done to orient the commercial real estate industry to better ways to decarbonize. And that was done as a consortium that Systemic brought together, as opposed to work just with one commercial real estate owner. So there's a plug for Systemic. There's a report great report. I'll share it. Maybe it can make it into the podcast.
Yeah, absolutely. It's a good plug for Systemic. It's also a sort of undercover plug, which we didn't pay Tony for Planet for Action. That
That's
idea
right.
of bringing together these stakeholders, that there's great work happening in certain places, but it needs to be dispersed. It needs to be shared for it to really scale out. So definitely appreciate that.
And I wanted to make sure, I know we may get into this a little more next week, but it's creating community that is really a huge part of it, and that's why I'm so thankful that you both have put this community together and to be a part of it.
We're so grateful to have you on the stage with us.
Absolutely, absolutely. Now, in our last discussion, we actually were talking about the last climate boom and bust, right? Yep. So it was pretty dramatic in terms of what's actually been able to happen. But when you start thinking about it, you say, okay, well, look, venture capital is one of the primary drivers and funders actually of this entire sector. So what are the lessons learned that you think that they've actually been able to apply now as we start kind of rolling through this new round of funding?
I think one of the big ones is definitely that, going back to really the first topic, that unit economics and financials are fundamental to long-term health of the business. So that one is certainly we're seeing that play out. Another is really around ideas whose time has perhaps come or not yet come, and so. There are certain ideas that could not have worked in the clean tech 1.0 cycle that now we're seeing have a lot better chance of working just with the price of, just for instance, battery storage having come down dramatically. Ideas that were around 10, 15 years ago, but perhaps a little bit early now we're seeing start to take off.
Excellent. So just in thinking that, kind of like going a little bit deeper on it. So given the VC model is what it is, like, do you think it's actually skewed the composition of really kind of what the broader ecosystem is for climate and climate businesses?
I think it has to a certain extent, and so I think the last decade was one where software as a service ate the world, and so I think a lot of businesses in the climate tech space tried to orient around a software-enabled model, which might have been the right strategy, or it might have been really more catering to an investment trend, and each instance is unique there. But I think where we are seeing really a lot of good and important questions being posed right now, and I know this is on our agenda as well to talk about, is how do hard tech businesses get funded? Because it's not, it is not the sweet spot for venture capital, for sure.
That's exactly it. And that's exactly where we want it to go, because it's good, to your point, to be seeing some of those changes applied throughout venture capital. And you certainly have some venture capital firms that are really on the forefront of new ways of deploying capital that are accounting for some of the nuances of what climate tech needs specifically for it to be able to thrive. But in terms of, again, having some of our audience from the March event doing our work for us, coming up with a fantastic question, we had a follow-up from Michael Lim from a great company, Xtelligent, who asked exactly that. That he shared that some of the most impactful climate tech are deep tech. And that means that they require longer development cycles, they have higher technical risks, they operate in complex environments, they frequently also are selling to government agencies, which have longer procurement cycles. All of those things contribute to a picture that is not necessarily super rosy for potential investors. And it has, as a result, created this gap in terms of the financing for them. Do you think that do you see that gap being filled? Do you see it being filled by evolving VCs, or do you see it being filled by other forms and sources of capital?
I see the thing I keep going back to on this question is the companies that have been successful getting VC or VC-like funding in this space have some form of firm offtake with major corporates for their product. And so major corporates really have a huge role to play in this market. A number of them are thinking through, well, we are, in many cases, really the ones creating the viability of these companies. Shouldn't we also participate in the equity value creation in a more fulsome way? And I think we will see that play out as a trend, because I think those firms have a unique capability to be able to deploy dollars at scale and to take risk to be a first customer on products.
Excellent. So let's actually pivot a little bit and actually talk. We've actually mentioned it a couple times just because it's so important, but we'll actually kind of clue in the audience a little bit for those who actually aren't as familiar as what we could be and talk a little bit about the GGRF, or the Greenhouse Gas Reduction Fund. So what that actually is actually a $27 billion program that's rolled out by the EPA. And what that's really about is actually how can they actually help transform financial markets and private and capital markets to actually get these dollars into the market faster in order to help decarbonize and help provide climate solutions. So when you start thinking about that, so if we're really trying to really transform these private financial capital markets, what can you share with our audience from what you've been working on actually in order to support the power forward communities?
Absolutely. So, for a little bit of background, one of the major projects that we've worked on over the course of the last year is supporting Power Forward Communities, which is a coalition of 5 nonprofit entities, in an application to the Greenhouse Gas Reduction Fund to decarbonize housing, in particular, is the focus of PFC's application. And so the coalition members are Rewiring America, Enterprise Community Partners, LISC, Habitat for Humanity, and United Way. And our strategy was awarded $2 billion by the EPA.
Congratulations.
Thank you. Thank you. It's super exciting. And
Yes.
now the hard work begins to deploy the money. And so really the orientation of our application, as I mentioned, was decarbonizing housing, which, as we know, is a particularly hard to decarbonize sector. Solar and transportation also are key sectors being focused on by this program, and those were really strategies that were picked up and run with by other coalitions who were also awarded. And so as we think about decarbonizing housing, there are really two elements to the problem, both of which are being addressed by GGRF dollars. One is just the availability of capital, particularly in low-income and disadvantaged communities. And as you may know, there was a requirement that a minimum of 40% of these dollars directly go to financing decarbonization projects in those communities. Our application set a much higher target. So we're looking at about 80% of the dollars going directly to those communities. And it's something that it's really core to the mission of all 5 coalition members. So it felt very natural to really set that high target for ourselves.
Yeah. Thank you so much for sharing that. I think as the audience that's listening in may be realizing, Tony, to your credit, you are not a boastful person, but you are, at the end of the day, one of the people that has been instrumental in the creation of Rewiring America and the creation of Power Forward Communities, and to that, what you just said, to very candidly, but is really warrants more attention, is that award of $2 billion to really making a difference in disadvantaged communities and helping them to decarbonize, especially when it comes to their housing stock. And that is something that should not be overlooked. And we applaud your efforts in that. And also why we're so grateful to have you here now to ask these questions, because I know there's so many people in the audience, whether it's other policymakers, the business owners, also the investors who are trying to think about how it's going to impact them, to have you to ask that question. What would you share with them? How do you think that they should start to think about this rollout of this money? And another thing, to your credit, knowing that you've been given a very short runway, it's going to be all working through plans now. I think the EPA has a deadline of distributing it all by September, and so it's a fast timeline in that regard as well. So we'd just love to hear what your advice is for stakeholders looking to prepare.
Absolutely. So there's because it's federal funding, there's a traditional federal procurement process that EPA is coordinating with coalition members about the parameters around, and so that is something that is just part of the receiving and distributing federal dollars. That's worth familiarizing organizations that are going to apply. It's worth spending time familiarizing yourself with that. And otherwise, I would say the original notice of funding opportunity is really good and worth reading. And I would say if your focus is housing, really PFC is a great place to spend time. All of the applications are public. All of the winning applications are public. So they can be viewed and read through, and we're executing on the strategy that we laid out in the application, and so are the other winning coalitions. And so I think there's that's really the right place to dive in.
Perfect. That's super helpful. And again, for the audience that's listening in, that is, again, one of the points of Planet First Action is to make that very valuable information readily accessible and available. And so you'll be able to see that in the show notes. You'll be able to see that on the website. We'll put the links to all the things that Tony just mentioned that are worth familiarizing yourself with, so they're easy to access.
Thank you so much for listening in and joining us on this hot summer day. We hope you enjoyed the conversation, but more importantly, that it left you, as it did us, with some valuable insights and new context to consider.
Tune in next Wednesday at the same time for part 2 with Tony as we dive even deeper into the Greenhouse Gas Reduction Fund and the other factors that are shaping and changing the social and economic landscape today.
And building from Cam Lawrence, Newlab CEO, over the last 2 weeks with Tony today, you might be starting to get the sense of the journey that we are going to go on together for this first series of the Planet First Action podcast. And we have some incredible guests who are going to follow on in the coming weeks, who are not only innovating financial markets and building amazing and soon-to-be climate-positive skyscrapers, but also leaders who are developing brand new technology and bringing it to market, and leaders who are taking buildings that are hundreds of years old and helping communities to retrofit them to save money and be more healthy today.
That's right. We can't wait. But in the meantime, subscribe, share, comment, and especially let us know what your questions you've been thinking about.
Exactly, and especially when it comes to the Greenhouse Gas Reduction Fund, because that is something that, as we said, everyone needs to understand. It is not something that is just there for the policymakers or the investors or the founders. It truly is something that is going to reshape our society in so many ways and have an effect on every single family in this country. And so it is important that everyone understand. And for those who want to learn more about Tony and the amazing work that he is leading with the team over at Purpose Venture Group, definitely head over to their website at purposeventure.co.
That's right. So we hope you all stay cool, and we'll see you next week.
Take whatever's mine.